Hey everybody, Courtney Smith here with our Wall Street winners for May the 9th of 2022. All right, the market, we had the big rally in the middle of the week when everybody heard Fed Chairman Powell say where they were only raising interest rates by 0.5%. The market, many people in the market had felt that it was going to be 0.75%. So on Wednesday, everything was exciting, everything was good, the bear market was over. And then I guess they must have just read the rest of the press release where generous Jerome Powell said he was going to raise interest rates 0.5% for each of the next two meetings. So that hammered the market down, and now we're challenging the lows of this bear market. Now, a couple of things that are interesting here. Let's take a look at this chart right here of the S&P, or of the SPY. So one of the reasons why I was bearish was because of this purple predictor, the on-balance volume. But notice the on-balance volume is actually starting to do better than the price action, which means that the smart money may be buying down here. All right, so we got to keep an eye out on this. If the smart money's buying, well, I like to be part of the smart money if I can. Dow Jones, we're seeing a slow decline in selling pressure here. That's the red line. But the green line's not doing much either, so let's call this a push. NASDAQ, on the other hand, breaks to new lows, even though the purple predictor does not. So once again, we got a little bit of a divergence, and normally the purple predictor wins that battle. So we could see a little bit of a rally here in the coming week. Seasonality, neutral for both the industrials and the Utes. Now, if the Utes break above the high on the chart, I'll turn back bullish on utilities and we'll start buying the Utes again. But right now, we need a seasonal buy signal and we don't have one yet. The reason why? Well, you can kind of see it. This is where we are in terms of the seasonality. And I think the red line has worked best of all so far this year. It's worked fantastic. You can see a little teeny bit of a rally there. That might be what the purple predictor is telling us is going to happen. But basically, bear market till the end of June. Okay, so we may not see a good rally until July and August. So right now, still have to play it from the short side. We got to hammer rallies. If we do get a rally there, it's time to hammer it. Beat on it like a tom-tom drum. Asset allocation, we're starting to suck money out of the bond market again, so that's helping the stock market. And maybe some of that bond buying is coming from the smart money. But they're not buying the risky stocks. They still don't want NASDAQ. And in fact, our stock market risk indicator, showing how much risk the market wants, is now at a multi-year low. They don't want risk. They want to be in things like utilities and consumer staples and super safe stocks, maybe high dividend stocks. That's what this chart is telling us. These indicators, nobody uses these, but you're seeing exactly what's happening in the market. I'm showing you who's doing what to whom. Now, global shares also extremely weak, much like the NASDAQ. Now, this is interesting. Let's stop for a second. So here we have the yield curve, and you can see if we measure it from 3 months out to 10 years, it's actually getting much more positive. The yield curve is getting much more positive. But if we look at it from, say, 2 years out to 10 years, it's basically flat. So it actually improved a little bit, but as the Fed raises interest rates, this is going to start to come down unless bonds continue to collapse. And they've had the worst year so far this year since about 1980. So 40 years, this is the worst bear market in bonds. Well, look at this, collapsing to new lows. Who was the guy that told you bonds would be in a big bear market months ago? Months ago, at the beginning of the year? Yeah, I forget who it was. Somebody told you that. Okay, our indicators, once again, screaming higher. The only exception is you'll notice gold is starting to come down a little bit. And that's the only key factor that tells us that interest rates may peak. But right now, interest rates continuing to go higher, and our indicators tell us that's what's going to happen. Dollar consolidated, I think it's breaking out again to a new high right now. Now, one of the things that we always want to look at is momentum. Notice that when we got above the 70 line, so this green line is the RSI, or Relative Strength Index. When we got up here above 70, the market backed off and didn't do anything for a long time. We got up above 70 here, the market went sideways for quite a while. We got above 70 here, the market's going quiet again. So it may drift sideways for a while, but you can see it doesn't mean we're going to see a bear market. It just means that we're going to stall the advance until the RSI gets down closer to the 50 line. So look for the dollar to be more stable, kind of with an upward slant. Let's put it that way. Now that should be supportive of gold. Gold is stabilizing here, but it's in a clear bear market. We're making lower lows and lower highs, so don't listen to those Johnny One notes. They're wrong 9 years out of 10, okay? Here you can see one reason why. Bearish indicator. Bearish indicator, pretty much neutral, maybe microscopically bullish, but our three key indicators, two of them are bearish, one of them is bullish, well, really kind of neutral. So gold's not going up. Crude oil, we broke out of the big triangle formation. We've now done it twice. I think we're going to bull back up towards the old highs now. We're starting to see some clarity in what's going on. So for example, we right now have fuel oil or heating oil in the United States way below normal inventories. Very, very tight supply of heating oil. That's a big component of the value of a barrel of oil. It's not the biggest one, gasoline is, but it's the second biggest. So that, and let me not forget, refiners are making more today than they have in decades. So remember, the only people that actually demand oil are refiners. You don't want any oil. I don't want any oil. I want gasoline for my car. I want heating oil for my house, but I don't want oil. So the refiners are the ones that buy it. And right now their profit margins are at $45 a barrel. I mean, just insane amounts of money that they're making. This is up over 400% of where it was just 2 months ago when all this started. So they're starting to come in and buy. You can see the purple predictor shows the smart money's buying. Back here, it really wasn't that bullish. Then it got bullish and it stayed bullish. So I think I'm back on the bull side of crude oil. Bitcoin drifting lower. Really, we're just, once again, I keep saying this, we're just trading the NASDAQ here now. So the air is being slowly let out of the Bitcoin bubble. Thank you, generous Jerome Powell, for doing that. But you can see the purple predictor remains a bit bullish. It's above the price action, which means that the smart money's buying. But so far, they haven't been able to get a bull market going yet. But that tells me that I don't really want to go short either. Yes, the trend is lower. Yes, the Fed is tightening. That's bearish for Bitcoin. But if the smart money's buying, it's probably better to just stand aside and do nothing. All right, thank you, Freebie. We love having you here. Fully paid up members, hold on for just a second. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called StockButler.com, StockButler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The StockButler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, StockButler, saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.